Okay, here we go. We are live. November 30th, 2022. It is time to once again open the market. We have about 31 days left of November, so the 2022, so not that much time left. So we gotta cherish these moments. Very, very few market opens left, at least in 2022. 2023, there will be a lot of them. Thank you, 21 people, for already being here. Roy, Dominic, Philip said, Amit, can I live with your parents and have breakfast too? I just lost $1,300 on crowd earnings. I tweeted a picture today of some breakfast my mom made because she stayed home from work. But here we go. We are live. Let me just put this in my Discord. 1 second. Uriel, Jason, Bacon, Rizzy, finally. You missed so many live streams. Finally, you're back. It made me so sad you were gone. Okay, live at here. Here we go. Awesome. So a couple of things on today's stream. First of all, there may be a little bit of background noise because I have some people at our house carpeting the stairs. So I don't know if you guys hear it. I don't know how good the mic is picking up, but there might be like some banging and stuff. I hope it's not too crazy. So hopefully it's not there. But outside of that, we're going to get right into the market. And the quality might be a little crappy right now. Give the Wi-Fi a second. It's probably going to get better. Audio should be okay, but video will get better in a little bit of a second. Anthony Johnston, what's up? Ruckshit says, good morning, man. How was your sleep or lack of last night? Yeah, I slept as I said I'm up at 2 o'clock. And then by like 2:30-ish, I just went to bed. I was like, all right, I'm done. I worked from like 11 to 2. And then I was like 2:30. I'm like, all right, I'm out. I got to sleep. And I woke up kind of late today. I usually wake up at like 6:30. I woke up at 7 today. But hello. Thank you all for being here. All right, let's get into the market. Gabe, thank you for being here. It's still there. What is still here exactly? Let me know. Gabe says, yesterday's stream going to be a regular thing. The Finance Junkies, yes, that is going to be a regular thing. That is a new podcast that all four of us are starting. We actually have a really fun announcement as I open up Webull that we're announcing next week. I'm going to start hyping it up now already because as soon as that stream ended, we came up with an idea on how to expand or how to make it a fun, more game with that podcast every week. I think you guys are really going to like it. Let me just say that next episode, you want to tune in. It's a really fun, interesting thing that I think you guys will enjoy. So we're going to be doing that and we're going to keep going from there. All right, here we go. Let's get into the market. I think the biggest thing to talk about right here is Crowdstrike, right? So Crowdstrike, it was a really volatile stock yesterday. Fell, as we can see, about 18% after hours. In the pre-market, it's down about 17.9% from 138 down to 113. Crowdstrike had a pretty phenomenal quarter just in terms of the revenues. They put up about $580 million, I believe. If I'm not incorrect, I'll check it in a second. The market cap of $32 billion. The problem is the market just doesn't care right now. At this moment, the market is not a fan of what they are seeing from some of these SaaS companies. So let me give you guys a couple of stats that you might not have heard on Crowdstrike for why the market is being so, I guess, mean to a company like Crowdstrike that's doing a pretty good job. So let me pull this up right here. Okay, so the net AAR, actually, let me just show it to you guys. This would be much easier. Let's share present screen. And here we go. Okay, so the good companies are looking to consolidate vendors. Cybersecurity budgets are not getting cut. Better with rates. Record pipeline. 1 million cohort up 67%. Net dollar retention up 124%, which is great, right? That's great stuff for when it comes to Crowdstrike. Now the problem is that net new ARR is only up 17% versus 44%, which means they're only growing about 17% quarter after quarter, where it was 44% the last quarter. 17% quarter over quarter is not bad at all. But you were 44% the last quarter, which is not the best. 11% increase in sales cycles, guided to 10% headwinds to new ARR in the fourth quarter. They beat revenue, they beat EPS, they beat every metric that matters, but they missed on their guidance just by a slight little bit by expecting some headwinds, which makes sense going into the fourth quarter of the year. You're going to expect some headwinds. And they're not expecting a budget flush in 4Q. 2024 net new ARR to be flat, 10% headwind in the first half of 2024. Low 30s ARR growth rate, low to mid 30s subscription revenue growth rate as well, which means they're growing, but they're not growing as massively as you would expect, especially if interest rates get to a point to 5 to 6%. As important as cybersecurity is, it's not going to be at the level the market's going to give it the premium valuation that we would be expecting. So, that's an interesting thing to look at, because if we go to Crowdstrike, it's a $30 $2 billion company. If interest rates were at 2%, this would probably be close to a $100 billion company. It's just that simple. But if interest rates are not 2% and they're going to increase more and more, at least that's how the Fed is considering it, and inflation is not going down as rapidly yet, then it's hard to justify buying the stock. And like these are some of the SaaS companies where earnings are great, metrics look awesome, but then you're like, wait a second, it's trading at a 17 times price to sales, even after being down the amount that it's down yesterday. What this means is, and David Sachs, who is a venture capitalist in Silicon Valley, he runs a firm called Craft Ventures, where he exclusively invests in SaaS companies, which is software as a service. He said in 2020 and 2021, companies were raising valuations at 100 times ARR. Meaning, if you made $1 million of revenue, your company's valuation would be $100 million. That was in the private markets. Now, in the public markets, if currently you can barely get a 10 to 20 times ARR of your annual recurring revenue because the multiples have decompressed massively because of interest rates, then in the private markets, you're not going to be able to raise money when the next Crowdstrike tries to get money. If they're only bringing in $1 million, they're not going to be a $100 million company, which is absurd. To think you're a $100 million company only bringing in $1 million of revenue. So that's ultimately some of the stuff that's happening right now with Crowdstrike, and I think that kind of explains some of the issues right now. It's 26 billion. Oh, it's 26 billion. Yeah, because of the decline. So it's 11 times price to sale, which people could argue is still a little bit bad. I think everyone that can agree that Crowdstrike is a phenomenal company. The valuation number is something just like Snowflake. Yeah, I mean that's the other issue. And when I think of cybersecurity, I exclusively think of Crowdstrike, right? Like I don't know if there's any other companies. I mean, there's some out there. Obviously, Microsoft does. Microsoft actually did about $10 billion from cybersecurity revenues in their Q2 earnings. I don't know what it was in Q3. But like, you know, that's not going to cut it, especially when you've got something like Crowdstrike. But the problem is Crowdstrike is a bit more unidimensional at the end of the day. If it's only focused on cybersecurity, it is the best in its business. But if it's only focusing on that, then ultimately it's hard to justify the valuation there. Let me just tweet this out live, morning open. Okay, so that was the Crowdstrike news. Before we get into the market open in 3 minutes, we have Doordash laying off 1,250 employees. Doordash is a company that went public a couple years ago, November 2021. It reached a peak valuation of $81 billion. This is when it was 257. And when it was valued at $81 billion, now it's valued at $20 billion. They had yet to turn a profit. DoorDash is a company I've never understood. Uber, I get because they were the first one to go public, and like, you know, there's like truly global network. DoorDash is just like, to me, it was always just a copycat of Uber, which is like, okay, fine, there's more competition. But why is this company like, what is the bull case on delivering food? Like, I never got it. The CEO of DoorDash sits on the board of Meta. It's like DoorDash is some beloved company, and I'm like, I think it's a great company. It's just delivering food. Like how is that exciting? Why is that interesting? It's just delivering food at the end of the day. So it's not that interesting to me. Jobs reported out. I actually did not know the jobs reported out. Private employment increased by 127,000 jobs in November. Okay, that's very good. Let me pull up the jobs report as well, and we'll go through that. Private hiring increased by 127,000 jobs in November, well below estimate. Well, that's also bad. I said that was good because 127 sounded good, but that's not the best at the end of it. Amit sounds. Oh shit! Hold on. Wow. All right, you guys ready for this? This is about to be magic. 3, 2, 1. Thank you for that comment. Amit sounds like he's calling us from Mars. Well, now it should sound like I'm singing sweet lullabies in your ears. Thank you guys at the 8-minute mark for letting me know that the sound was crappy, because now the sound must be phenomenal. You know, I was watching a live stream with Meet Kevin the other day. For the first 7 minutes, he had no sound. And he was doing some complex analysis. By the way, market's going to open in about 40 seconds. He was doing some complex analysis about some stock. For 7 minutes, he didn't check his chat, and he was silent. And he finally checked his chat. And by the way, this guy's like a $300,000-$400,000 studio, right? You would think he doesn't make these mistakes, but everyone, makes these mistakes. And it was funny because he was so into this analysis, and for 7 minutes, he was quiet. So there we go. It's much better now. Thank you guys for letting me know. Next time, if the sound is that bad, please let me know. All right. So yeah, DoorDash. I don't know if there's a bull case in that. If anyone has any comments on DoorDash, please let me know. David says you were there. Okay, that's hilarious. I never got Dash. I never got Uber. I never got Lyft. Lyft, by the way, has been destroyed. Lyft. I remember Lyft. I was a junior in college when they went public in 2019. It's $10, bro. It's $10. It was at a max of 86. They IPO'd at around like 73 or 53 or something like that.
I think 50 ran up to 70 something. And then they went down to 10. Okay, here we go. It is, what time is it? It is 9:30 a.m. last day of November. It's actually my parents' anniversary. So shout out to you, mom and dad. Mom, you sometimes watch these videos. Dad, you never watch these videos, but happy anniversary to you guys. It is November 30th, 2022, 9:30 a.m. And the stock market is now open. Wake your ass up. It is time to open the market. Enphase, of course, is up $308. I just launched a new podcast last night called The Finance Junkies, and we had a major Enphase debate. I'll be uploading a clip of that later. Chris, me, Vitaly, and Carlos, I think you guys will enjoy it. So we talked about Enphase. That will be an ongoing topic on this channel. So S&P at 395. S&P, again, not leaving that trace of 395. It's stuck there. Spotify at $75. Spotify Wrapped has come out. For those that don't know, it's like the data analytics understanding of your music and listening habits. Apple has copied that. They call it Apple Review, which is a good idea. I wish YouTube Music would copy it because I use YouTube Music and I would like to know my best songs of the year. So hopefully that happens. But Spotify Wrapped is out, so you're going to be seeing a lot of that. ARK Innovation, ETF 3513, stuck in that 35 range. Roku at 54. Apple, look at this bad boy. Might be hitting 130 soon, or at least below 140. Some of the Twitter stuff might be a little bit of an overhang here. Now, there was a good point made yesterday on the podcast that the Twitter stuff, like Apple could probably give a shit about Elon Musk and Twitter. They don't care. But the regulatory scrutiny that Elon Musk is going to start making a huffus about, that's going to cause people like Ron DeSantis to say, hey, we need to investigate them even further than we already are for antitrust policies. I think Apple would rather advertise on Twitter than have Elon Musk, keep screaming their name and how they need to be broken up. So that's one thing to take into consideration when it comes to Apple. Roblox at $30, Netflix $282. I have an interesting argument on Netflix that I'm going to talk about in a little bit. Tesla 183 up 1.3%, doing well for the day, flat from yesterday. DWAC, this is Donald Trump's SPAC, which is worth $861 million. It hasn't fully closed into an official company. It's the reason he's not coming to Twitter, because he's going to lose a lot of money if he goes to Twitter and leaves Truth Social, which is basically what DWAC is. Meta Platforms at 110, Microsoft 240, Alibaba 82. And that's pretty much nothing too crazy. Amazon 92, nothing crazy in the pre-market, at least in the beginning, that we're seeing. Bitcoin 16,832. Bitcoin actually went up to 17,000 last night, so it rose up a little bit. Nasdaq close to being under 11,000, so a little bit low for this morning. But outside of that, nothing too crazy. All right, let's get into some of these comments. See what you were saying. I think people are bullish just because it changes the way things are delivered, not just food. For example, my brother ordered AirPods from Best Buy and he got them through a third-party delivery app. Interesting. So the delivery process is what's exciting to you. Okay, that could be the potential case. Amid big Neuralink event today, exciting stuff, and Tesla semis get delivered on Friday. Very cool. Neuralink is one of those companies that is incredibly exciting, because if they can fix people who can't walk because they put chips in your brain, I mean, that's very, very interesting. So definitely would be like to look out for that. Apple Music Replay made no Twitter noise. Spotify Wrapped is quitting. I agree. And I think on Instagram as well, Spotify also happens as well. Neo, you said Neo. What's so good about Neo? Are they down today? What's going on with them? Oh, wow. Neo's up 12%. Put in the comments if you have Neo. I don't think a lot of my community owns this stock because it's more of a Chinese company, but I know some of you guys own Neo. I had this beloved bad boy at $3, ran up to 60. I sold at $6. Everyone knows the story. So, man, if I just kept my investment in Neo, I think I had like 600 shares. I would have had like a good 30 grand, like probably like 25 grand of profit or something. Like, it would have been amazing in 2020. And, it just didn't happen. But what was the other thing I wanted to talk about? Okay, yes, Netflix. So one of the things I wanted to talk about, let me show this real quick, and then we'll get into some other macro-related news. Here's a picture I tweeted yesterday. I know I go on a rant on Netflix a lot of times, or why I think it's probably not a good company to invest in. Even if the stock price increases, I don't see the value of it. This picture right here is why Netflix is not something I would invest in. DRK, thank you for being here. Good morning. The Fed is also speaking today, I believe at 2:00. We will get a little bit more updates from the Fed. I don't think any updates are going to be massive in terms of what they're going to say, to be honest, because they've said the same thing historically over the past couple months. So, but we will see if anything changes. This is why I don't think Netflix wins. Look at this. 43,000 people are watching a kid sleep. The kid was sleeping. 43,000 people were watching. That's not a joke. 43,000 people were watching somebody sleep. I mean, at some level, you've got to ask yourself, how is Netflix supposed to compete in the content game when 43,000 people would rather watch a kid sleep than watch Stranger Things? Someone give me the answer to that question. Because the point here is not that Stranger Things is not valuable. The point is, how much do you have to pay to keep putting up those types of numbers on the board versus letting people do anything on the internet and driving massive levels of traction and awareness? That's the difference. This is iShowSpeed. Yes, that is iShowSpeed. So that's the difference at the end of the day. And that's why that's ultimately my bull case on Netflix. Shout out to 205 people being here. Thank you all for being here. Raksha says, any update on Apple and Twitter saga? Did Elon say much? So Elon actually didn't say much yesterday. He just replied to a couple of tweets saying that Apple's like mean, but nothing overall happened. Well, he did. Blah, 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 blah. Yeah, I guess he did say this. This is Farzad. This is one of my good friends. Farzad said, we're complaining about Apple's monopolistic app store. In 10 years, we'll be complaining about Tesla's monopolistic self-driving software. Elon said accurate prediction. So that's one thing. But in terms of actually responding to Apple, there wasn't too much stuff happening there. I think at the end of the day, he's just making noise to rile people up. I don't think anything fundamentally changes when it comes to Apple because, yeah, Apple's not getting rid of their 30%. TTCF is at $1.40. Goodness gracious, this stock. Okay, I want to introduce another piece of news that launched yesterday in the finance community. Here we go. It is #PP. This is the Meet Kevin ETF. For those that don't know, Meet Kevin, obviously you all know him, financial YouTuber, and we're talking about him because, hey, he's a financial YouTuber that launched an ETF. I mean, that's a pretty big deal, pretty cool thing. These are his top 10 holdings in the ETF. Tesla, Apple, U.S. Treasury bonds, 2 years, Taiwan Semiconductors, UDN, which honestly, I don't even know what UDN, the dollar index tracker, TTD, Trade Desk, Enphase, Occidental, AMD, and Lululemon. What is one ticker you would never have in this ETF out of these 10? I want to know. What is the one ticker out of these 10 you were like that you just don't want to have? For me, honestly, it might be Lululemon, although Chris, who's one of our friends, is very bullish on the lemon. So I don't know why, but Chris is bullish on the lemon, so I guess it would be Lululemon. But it's an interesting ETF. You got Tesla, you got Apple, you got Enphase. It's not, he's trying to say it's like kind of innovative-y, but it's not like super Cathy Wood innovation. It's not like companies that are not making a profit. So it's not a horrible ETF. It'll be cool, pretty cool to see how he is able to manage it over time. You don't show up on Twitter search when I search your username. Martian, which search, what are you typing up? Are you typing it at Amid is Investing? Let me know if it still doesn't pop up. That'd be interesting. Okay, Joel just shared a video with me. I'm going to share that video right now. It has to do with Tesla and Toyota. Let's look at this comparison real quick. It's a 40-second video. And let's see what this one is about.
Hey, everybody. Just a little quick out there. What you need to do is you need to go and see Reuters. They've just released some information on the new Highland project, which is going to be the revamped smaller Model 3, or let me rephrase that, less costly Model 3. But this is the best part. Look at where Toyota is. This is profit per vehicle at $1,273. And look at Tesla, profit per vehicle, $9,754. Wow. I've never seen profit like that. Tesla, profit per vehicle,
Okay, I want to look at that again. Toyota, 2,265 in sales, net profits 1.373. Yeah, I mean, it's obviously showing the profit per vehicle is like 4 times the profit of Toyota. Tesla outpaces Toyota in profit per vehicle. Tesla made $9,754 per vehicle sold in the third quarter net profit, almost 8 times. Sorry, not 4 times, 8 times the equivalent. Yeah, because 1,000 to 9,000, 8 times the equivalent of Toyota. Interesting. That's a very interesting piece by Reuters. I mean, it's not that surprising. We know that, Tesla's margins are the best margins in the auto manufacturing. That's why when people say Tesla's just a car company, it's like, yes, even if you don't want to take, even if you want to take robo taxis and even if you want to say it's just pure cars, they have the best margins in automotive history. I was watching Elon Musk say the other day, like very few companies that have tried to start a car company over the past 100 years have succeeded, right? Like almost even Ford almost went bankrupt. So like the fact that they're able to not only succeed, but have the margins that they have is pretty astonishing as well. Tesla Bite Size says, I don't think I've ever seen Sandy look so mind blown. By the way, everyone should go follow Tesla Bite Size. He takes the best Tesla content on the internet and puts it into like 2-3 minute bits and pieces, just like he did with Palantir. It's the same person running the Palantir Bite Size account. So I'd highly recommend checking out the Tesla Bite Sized account as well. Okay, let's go go back into the markets, and then we'll get into some of the talking heads and seeing what they're saying. CrowdStrike at 111 now, market cap 25 billion, price to sales at about 13. It went down from about 30 billion, so it lost 5 billion in market cap. Meet Kevin's PP is up $20. S&P still stuck at 395. Enphase is up today at 311. Spotify 75. Yeah, nothing's pretty much changing. Where's Taiwan Semi Manufacturing Conductors? I totally butchered that name right now. TSM. $80. So this one again still doing well, up from 59. Obviously, when you get Buffett buying in, you stay up. Ulta Beauty. This is a stock we revisited a week ago. Ulta Beauty. Look at the 1 year on Ulta. Like it's barely down on the 1 year. It's like it's actually done pretty decently from the lows of 2022 when it was at 330. Now up at 461. Ulta is one of those companies we all missed. Like I wish I was doing due diligence on Ulta in May and like reading, like it's one of those things where you want to have some moments in your investing career where you find these gems that no one else knows about and you just go all in and research and you kind of make some asymmetrical bets. Obviously, I think that could be me with Palantir. I know there's a big community around it, but I don't think anyone expected Ulta Beauty to be where it's at right now. I mean, that's a hell of a story to see that happening. Okay, let's get into the talking heads and see what they are speaking about. Airbnb is another company that I've never been interested in, man. Like, does anyone care about like DoorDash, Airbnb, Uber, Lyft? These are Silicon Valley beloved companies, but I think you make money of them if you invest in them privately, like before they become, public companies. Publicly, they're just not that interesting. Okay, let's look at this one. We expect the US to slip into a recession next year. Let's get some bear news and see what they have to say. Amit, do you know of any info on other solar stocks besides Enphase? So there's SolarEdge, there's ticker symbol RUN, ticker symbol SOL, ticker symbol Nova. I know about these stocks. Do I know as much about them as I know about Enphase? No, but I'm researching them. The fact that I know these ticker symbols, I'm starting to see all the different things that are in the solar world. It's just none of them make the microinverters, or none of them are that interesting enough where they have this massive dichotomy between what they do and what the market needs. Enphase is the one company that does, based on the research I've done with the microinverters. SolarEdge obviously is a competitor, but the other ones aren't kind of in that same stratosphere. But we'll keep doing research on them and see what they say.
Tiffany, what are your thoughts? I mean, this is a kind of crazy time. We're looking at every single number, trying to figure out which way the economy's headed. What's your best guess after these most recent numbers?
Yeah, I mean, I think there's a little bit of noise that you have to take into account, because inventories and trade numbers can obviously be very volatile. And if you kind of dig into the details of the third quarter GDP number, what you find is that when you exclude those more volatile categories, growth was actually pretty subpar. So for the year as a whole, excluding those categories, we call that final domestic demand, growth is sub 1% at this point, and that's coming off of a really robust year of 5% last year. So growth has decelerated, kind of core growth has decelerated quite a bit, and that's even before you're really starting to feel the effects of Fed policy and Fed tightening, because that works with a lag. So we do think the economy slips into recession next year, under the weight of the, financial conditions tightening that we've seen so far. But nevertheless, of course, it's always good news to have some slight upward revisions to the third quarter GDP growth.
Steve, if you were trying to figure out conventional wisdom, where does it stand right now in terms of the number of economists who are expecting a recession, not just economists, but more broadly, people, watchers, traders, anybody else on this, versus those who think you could have some sort of a crazy...
It's funny you asked that question, Becky, because I was just looking at that this morning. And I want to read you some of the commentary that I have here. Barclays, this is before the GDP number, says, we've delayed our estimate for the downturn. Our revisions allow spending momentum to carry into early 2023, pushing back the shallow recession that we had shown in our prior forecast by 1 quarter. Eddie Ardeni is saying, we think this time is different. There's been no broad-based credit crunch. Liquidity is ample. Consumer spending is growing. Multifamily, I don't want to read too much of this, but basically they're in the soft landing camp, as are the folks at Oxford. So I was actually just thinking to see what happened on the report on Friday for the jobs report. But I'm wondering, Becky, if the United States has canceled its appointment with a recession. With due respect to what Tiff.
That's interesting. Cancel their appointment with a recession. As you can see on the bottom of the screen, Q3 GDP revised 2.9% versus 2.6%, which means we think we're going to grow 0.3% more in quarter three. So obviously, right, it's a crapshoot of like what's going to happen, what's not going to happen.
Tiffany says, I get what she's saying, that is probably the conventional wisdom out there. But I'm starting to wonder, Becky, if maybe, don't throw things at me, we get out of this without a recession and more of a growth slowdown.
I can't throw anything at you because you're not in studio. But Tiffany,
Let
me ask you, how? I mean, it seems like this is. I don't know how long you've been doing your job, but it seems like this is probably one of the more difficult scenarios to try and figure out. It's not like the globe is moving in lockstep. We had a conversation with the former Prime Minister of Australia earlier this morning, just talking about how China has so much sway over what happens to anybody, and if they have a recession at this point, that will have some serious global ramifications. How do you put that into your models? What are you thinking?
Yeah, I mean, certainly China has a big influence on global activity, in particular manufacturing activity.
Let me show you guys something here. This was a great tweet that someone responded to on a Twitter, a tweet that I had that goes in line with what we're watching on CNBC. So I said, so when we see stocks like Crowd fall 18% of our pretty strong earnings, why do we think stocks still have lower to go in 2023? And here's an interesting tweet from Josh. Shout out to Josh Storm. He said, well, let's be real for a second. I'm a perma bull, but the S&P is trading at around an 18x earnings, 18 times earnings, and many expect a recession or no growth in 2023. And it usually trades around 15x on average. So with treasury yields this high, there's really no reason for it to be trading above 15x. It's a good point. It's not a bad point. It's a point that actually, you know, I've even said on the channel as well around how PE ratios are calculated and how Google, Meta, Netflix, all these companies rose because PE ratios were absurd with low interest rates over the past decade. So one could argue that the S&P itself trading at around 18 times earnings when it's not supposed to be more than around 15 times, and we're entering into a year that has so many negative catalysts that could potentially happen that we are prime to have a crash. However, you know, as crazy as 2020 and 2021 was with inflation being transitory and everything that happened, what if the Fed figures out how to have a soft landing? I mean, like, what if? Because technically we're still in soft landing mode. Right now, the S&P is at 395. It's down like, what, 10%, which is nothing really in the grand scheme of things. So we're still kind of in a soft landing mode. We're in a mode where things aren't panicky. We're not down 30, 40%. We're definitely not down 59% like we were in 2008. We have to go down to those 30, 45, 50% levels for this to be a, you know how we say the 2000 was the dot-com crash, 2008, the great financial crisis, 1929 depression, like Black Monday or Black whatever was 1987 or something like that. I might be getting that specifically wrong. We don't have one of those things to say for 2022 yet because 2022 is not that bad. We're sitting at down 10% on the S&P. That's not that bad. So 2023, is it going to be the crash of 2023 or we're going to come up with some fancy name for it? It has to be a massive crash. And if CPI keeps going down and the Fed somehow maneuvers this, raise rates a little bit, but CPI comes down and like we figure this out, who knows if there's a soft landing? I mean, who knows if that happens? And if it does, you know, it would be one of the most amazing things the Fed could possibly do. Let's listen to this. Apparently, Sam Bankman-Fried is still talking at the DealBook Summit today. This is insane. I highly recommend everyone checking out CoffeeZilla's video of him showing an interview with Sam Bankman-Fried. I can't believe this interview is still happening, but let's hear CNBC talk about how they're doing this.
Right now, as promised, we want to get over to Andrew, Andrew, this is always a huge lineup every time you do DealBook, and this time is no exception. We can't wait to see what you have this morning.
Thank you. It's funny because DealBooks turns 21 years old this year. As you guys know, I started it in my pajamas back in the day when we were sending out the newsletter, in some cases by fax machine. Today, we have about 1 million people who get it every single morning. We've got a huge day ahead. We're going to be dipping in live right here on CNBC throughout the day, bringing you all the coverage. Let me give you a sense of what's on tap. Kicking things off, I'm going to be speaking with Treasury Secretary Janet Yellen here. And then later, we're going to talk to BlackRock CEO Larry Fink. Also on the deck, Amazon CEO Andy Jassy. So much to discuss with him, given everything that's going on in tech, the layoffs, labor, and more. And then in the afternoon, we've all talked about the Netflix correction repeatedly. Well, the man himself, Netflix CEO or co-founder, I should say, Reed Hastings. And then, we also talk about TikTok and all of the issues with China and the security issues. The CEO is here. Shou Chu is going to be with us. We're also going to spend some time with Ben Affleck, who's starting a new war. Mark Zuckerberg is going to spend some time with us as well. And then at the end of the day, and this is the one that I think a lot of people are waiting for, but also has created a lot of controversy. I'm going to be speaking with FTX founder and former CEO Sam Bankman-Fried. It will be his first live interview since the company collapsed. A lot of tough questions to be asked and hopefully answered about what happened there.
I don't get how that interview is going to happen, bro, because like the guy is supposed to be in prison, right? That's what we all assume is going to happen. How is he going to maneuver being on stage and not say something that leads him to prison? Like, what if he flat out asks him, hey, we're using customer funds? And like, maybe there's a certain legal answer you're supposed to give to avoid like an admission of guilt, and he doesn't give that specific legal answer. I mean, like, I don't know, but it's interesting to see him even want to do an interview. I think him doing an interview is him also ultimately saying he's innocent. Because if you were massively guilty, you wouldn't want to be doing a public interview, right? Like, public interviews are for people that have nothing to hide, even if they fail, right? You fail at a company, it's whatever, you do an interview. But fraud, you don't do an interview. You stay quiet, right? You don't want to say anything. So I think either he's wrong and he's trying to give the perception by doing this public interview that he's not wrong and like that everything's okay, or he's actually just not smart for taking this interview. And in this interview, he's going to say some stuff that's probably not going to be the best. I guess we will see what happens. But that's gonna be good TV, man. It's gonna be exciting to see what they have to say. How is SBS walking around like he didn't just steal billions? Well, that's the problem, right? Like, how is that happening? I don't get it. Like, how does he come to the United States and not even get under arrest or anything? Is this gonna be a virtual interview? I have no idea if he's still in the Bahamas, but it's weird, man. He's gonna get softball questions. Yeah, one of the things about Andrew Ross Sorkin, he interviewed WeWork's CEO Adam Neumann after the collapse and I saw that last December. And some of those questions also were a little bit, I think he could have been harder, but it wasn't bad. So let's see how he asked them questions. And we'll see. Jail time will come if his intent was to do fraud. Yes, I agree. The question just becomes, intent or not. If you're stealing money, like, I think the court would presume this is intent. There's no way you're jokingly or mistakenly stealing money unless someone else is doing it or unless there's some massive mistake we've never seen before in financial fraud. But outside of that, if he can prove he's an ignorant moron, he won't get jail time. That is correct. If he can prove that he's just ignorant, he probably won't get jail time. But if there's some level of intent, maliciousness there, then that's true. SBF gonna gaslight himself out of jail. He will somehow figure it out. Okay, DoorDash at 56, Crowdstrike 113, S&P 395 again, still flat. Square 62.69. A little bit down from there. Oh, Snowflake has earnings today after hours. Snowflake's earnings are going to be very interesting. Why is it going to be very interesting? Because Snowflake is currently trading at, I believe, a 25, price of sales, but also a 20 to 25 TTM, which is trailing 12 months revenue, which means if you buy a share of Snowflake, you are buying, it was 30, but let's just say 30 for comparison, right? It was 30 times the last year's revenue that you were paying for Snowflake. Palantir was trading at a 10 times TTM. Okay, so just from a pure fundamental perspective on that respect, that was a little bit different. Also, Palantir is trading at a price of sales. I literally forgot to mention today. It's because I did a video about it. Palantir got a new deal. I mean, I have a actual video that I did about it, but let me just give you guys a small basic rundown. I'll do it on Twitter. As I made a video about that. It'll come out in a little bit. Let me just share my screen real quick. They partnered with Lockheed Martin. Okay, so very, very cool. Two defense contractors coming together and working on some exclusive stuff. Palantir and Apollo, Palantir and Lockheed Martin are announcing a collaboration focused on delivering modern software to support today's and tomorrow's Navy combat systems by leveraging Lockheed Martin's deep technical experience and Palantir's Apollo platform. The collaboration focuses on driving innovation and working closely with the U.S. Navy to modernize its combat systems. Palantir's Apollo enables a technique of software development and delivery called autonomous deployment. In the video, I talk a little bit more deeper about what Apollo is, but they're using Apollo, which is this autonomous deployment of software product with Lockheed Martin's defense products to create something to help the Navy be a little bit more modernized when it comes to being able to deploy software. So interesting stuff for Palantir. And, the deal is not going to, make the stock price go up or anything. And I talk about that in the video, what I think about the deal in relationship to the stock price. But it's a good deal. These are deals that we want to see. We haven't gotten a public deal with Palantir since the Hertz deal back in October. So, and obviously then they had earnings after that, and earnings, I was, forget the numbers. I just didn't like how they did earnings because like Karp didn't seem like he wanted, like as a CEO, you got to want to have to answer questions, even if they're hard. And they seemed like they didn't want to answer the questions, which I get it. I understand that's their mentality, but I wish they were just a little bit more accepting of the fact that the rest of the world is trying to understand their business, even though I know they think their business is 10 years ahead and they're going to figure it out. I get it, but that would have been nice to see as well. Chris has told me to look into Nubank. He says this is his bet over SoFi. Nubank's market cap is $19 billion, trades at roughly the same price as SoFi, $4.5. SoFi's market cap is $4 billion. So Nubank's price of sales is 503. If we go to SoFi, their price of sales is 2.6, and they have 70% less of the market cap than Nubank, or 65%. I don't know. In some world, I kind of think SoFi is a bit more undervalued than Nubank. Now, Nubank in Brazil, I believe, is growing like crazy. So I haven't gone into a whole deep dive on Nubank, but if you own Nubank, let me know and we can discuss more about it. Chris made a good point about a point about Coinbase yesterday on the podcast. Again, Financial Junkies, you guys can check it out. It was a fun one. I think I want you guys to just listen to a little bit and see if you like the vibe, because if you did, then we might have something that's cool here. Coinbase has $5 billion in cash. If they are the only exchange to make it out alive, by the way, BlockFi filed for bankruptcy as well yesterday. If Coinbase survives after this crypto winter, which let's give it 2 years to be conservative, then Coinbase is going to be the only exchange left in town that's really regulated and has the trust of consumers. Like the reason all these new exchanges popped up, FTX, Gemini, Celsius. What the hell is Celsius, bro? Like why? Like I was like, Celsius. This is crazy. Like, why not call it Fahrenheit? Like, there's just ridiculous names that were BlockFi, all this stuff. BlockFi, by the way, raised $330 million at a $3 billion value, and like insane amounts of money. The reason they popped up and they got people to buy in, Voyager, that backhoe, Voyager, is because their average percentage yield rates were insane. You're getting 9% on your money. Like, what other place gives you 9% on your money for no risk? The reason they were able to give 9% on their money is because when you were putting in $1, they had the stable coin, the Gemini USDC coin that was pegged 1-to-1 with the dollar. So it was collateralized with the token of the exchange, but it's pegged 1-to-1. So it's not supposed to collapse. But when you have liquidity problems, when you have massive withdrawals, when your tokens start getting dumped, which is what happened with FTX, the exchanges collapse. Coinbase doesn't do that. And so Coinbase doesn't give you these massive yields, which means they don't get as many customers, right? Because that's where the customers are going to go. But they've survived. And at the end of the day, if you've survived, that's really all that matters. Kraken will be okay too. Yeah, I haven't looked too much into Kraken, but that company might be all right as well. So it's going to be interesting to see. Cash King, hey Amit, how did Rivian beat Tesla to the truck and commercial fleet after 10 years of being public? Tesla will now do their first deliveries of semi-trucks. That's a good question. Look, I think the Tesla's semi-trucks, from an elementary understanding, on my perspective, are different than Rivian semi-trucks. I believe Rivian, if I'm not incorrect, started building their company with trucks and these like semis in mind, whereas Tesla wanted to make a mass consumer car that then they could use the profits and leverage off of to then expand. So, I mean, at the end of the day, Rivian, let's go to Rivian. I haven't seen Rivian in so long. What is Rivian's market cap? It's hard to compare them because one is actually built shareholder value and return. One has just been stuck. Yeah. Rivian IPO'd at 100. I remember this, guys. It IPO'd at 150. I remember do you remember when it IPO'd? You have to remember this if you were into the stock market in 2021. I remember, and I would remember watching people saying, who the hell is buying a $150 IPO of Rivian? Like, that's how we all should have known it was the top. But that was insane to me that Rivian was like 120 or 150, something like that. Ran up to, or maybe it was 110 actually. It might have been 110. And then it ran up to 179. I felt FOMO. I didn't buy this shit because I knew this was ridiculous. And then it just slowly collapsed, right? Tesla had a much better share appreciation cycle over the past 10 years. And so I think their semis will be successful. Cybertrucks will be successful. But it's because they've done it slowly and methodologically versus something like a Rivian. So those are my thoughts on that. Rivian's IPO was scary. Yeah, man, it was scary, right? It was I made so much money shorting Rivian. I've never shorted a company yet. I'm still too scared to like legitimately short a company. So I knew I should have bought puts on Snapchat when it was at 20. I was like, come on, bro. Like Snapchat's not, it's not, but It's good I didn't buy it at 7 because then it rebounded 30% and went back up to $10. Bacon Bomb says it's strange that Tesla semis made its first 500-mile journey and they're going to be delivered 6 days later. I mean, it is what it is at the end of the day. This is the time where they're going to be coming out with the semis, and now they're coming out with the semis. I don't know that much about Tesla semis. I haven't researched them that in depth. They look pretty cool. Like from what I remember, those bad boys looked pretty good. I think Pepsi was the first buyer, right? Of these Tesla semis, or like the first big corporate buyer. Yeah, I mean, these look pretty cool, bro. Look at these. Look at these bad boys. These are pretty freaking cool. And then let's look at the Rivian semis. Are these the Rivian semis? Tesla semis look cooler. I mean, just objectively speaking, they look cooler. But yeah, it's not bad. I know Amazon or Ford one of these companies had a stake in Rivian, and they ultimately sold their stake a while ago, and they made some profit. I think it was Amazon, if I'm not wrong. But yeah, I mean, look, Elon's got the job. He's managing a lot. Okay, and for Tesla to do what they're doing, and for them to finally release these things, he makes these aggressive targets. He says Twitter can get 1 billion monthly active users in 12 to 18 months. That's probably not going to happen, but he keeps the line high, and then you aim. It's like, go for the stars, aim for the stars, land on the moon. And I think he's had that philosophy when it comes to Tesla as well. Rivian doesn't have a semi, they have a delivery van. Okay. So that's what I thought. I didn't think Rivian necessarily had semis, but I don't know the most about that. Amazon is still in Rivian. Ford was in and sold. Okay. So that makes sense. Ford was in and sold, and Amazon, I think has like a $10, $15 billion stake, something like that. $8 billion. I know Ford, I think had a $20 billion stake, but I might be wrong on that. Fidelity will be bigger than Coinbase in the crypto space. Wow, that's a take. Fidelity will be bigger than Coinbase. Interesting. I'm actually opening up my first Fidelity account because I've been a little Robinhood boy next week, and you guys will know why I'm doing it because it's going to be publicly explained why I'm doing it on the next Finance Junkie podcast. So I think you guys will enjoy it. All right, that's pretty much it. 10 a.m., 209 people. Thank you guys for being here. Merch is launching next week, December 5th. I already got the Shopify store done, everything. I hope you guys like some of the designs. Just a little merch stuff about my startup, stuff about the channel. If you guys support it, you guys can enjoy it. Tried to make it as inexpensive as it can be because with shipping and the cost of the thing, I tried to like actually keep the profit margins for me not as insane, maybe like 10, 15 bucks. So you guys will see those then. Thank you guys so much for joining. I appreciate it. Gabe says just in job openings, 10.334 million, expected 10.25 million. Yeah. Oh, so those are the job openings. So the job additions were 127,000, but the openings are now, okay. So what Gabe is saying here is that we have about 300,000, 400,000 more, a substantial amount more job openings, which means open positions. Now, that's not the best thing for combating inflation because the Fed kind of wants people to like not have that many jobs in because that means there's, less demand, less money being put into the economy from a demand side, which reduces inflation, which increases inflation. However, one could argue that more job openings are actually good because that means there's more competition for wages. And if there's more competition for wages, that means those wages can go down and potentially have it happen as well. It's all service jobs and stuff like that. Okay. Amit, make a video pretending you had an ETF and give us 10 stocks you would put in it. This is actually very similar to the thing we're doing on the channel next week. You guys are going to see the Finance Junkies tune into next week into the podcast. It's actually going to be really fun. It's going to be cool. All right, everybody. Thank you so much for being here. I appreciate it. I will see you guys later throughout the day. A bunch of videos coming out today on Palantir and some clips. And yeah, I'll see you then. Enjoy the day, everybody. Bye-bye.